I like them. Because I enjoy them, I watch their content, I listen to them, except for Dylan. He kind of more tells me what to do because he's one of my partners. So with that said, can I keep these?
Yeah, you can. I don't know, all-nighter. Can Patrick keep the dice?
You got my blessing.
So today we're having a panel. The idea of this is we're going to have a lot of conversations, and I have several people who have been coming in from the Zoom asking questions. So the idea is we're going to have a little bit of a panel today. As you guys know, cryptocurrency, digital currency, Bitcoin, that's been something we've been talking a lot about just because it is putting some competition into the silver market, as we've seen, into the gold market, into the asset market. Money is flooding out of stocks, it's going into crypto, and I think it's so important to have these discussions. I have a lot of guys who have tons of experience here, but Joe, I'm not going to give away too much because I know you've got a whole lot to say about the future of currency, and that's coming later. But what I want to talk today, I'm going to throw the first one out to Simon. Simon, Uneducated Economist, UE. So when I'm looking at cryptocurrency, digital currencies, we see that there's a lot of people, especially even in your channel, when you look at your group specifically, they don't understand what's happening with Bitcoin, digital currencies. What do you think the fears are that they have with central bank digital currencies or even other asset-backed currencies?
I think, what I gather from my viewers and when I bring up cryptocurrencies is kind of like the same old thing that you always hear. It's just like, if you don't own it, you don't hold it, what happens when the electricity goes out. But really, when it comes down to the central banking, when we think about like Bitcoin and central banking, I don't know if these two are going to marry in a fashion that, a lot of people would anticipate maybe they would. In my opinion, I think that the central banking system is really probably looking more towards stable coins as part of their integration into their systems as opposed to, say, the Bitcoin, or something of that nature.
Jack, when we talk about a lot of these topics as well, you and I have had specific conversations when it comes to NVIDIA, CoreWeave. We've had a lot of behind-the-scenes conversations about the truth that you can find within blockchain. We know that Bitcoin is truth. We know that what happened will always be. You cannot change that. Help me understand, what are you using these days, and what do you think is going to happen when it comes to using asset-backed digital currencies? Do you see a space for the silver community? Do you think these guys really are going to use a gold-backed silver currency?
As far as a gold-backed digital currency, or basically the merger of precious metals and blockchain, I never really got behind that concept. I really wanted to like it because I like Bitcoin and I like silver and I like gold. And squeezing those together, making the one thing out of it, seemed like something I could really get behind. And I went into it and I started researching it and I really wanted to like it. What I got hung up on is all of these asset-backed digital currencies, or silver-backed, gold-backed, they're private companies. They're run by people. They have a CEO, they have a building, they have CFOs. And there's a lot of trust involved there. And the biggest draw that I have with Bitcoin is the distributed ledger technology. The way it's maintained is that trust has been eliminated. You don't need to trust the CEO. Bitcoin has no CEO. A lot of people say Satoshi's anonymity is a liability with Bitcoin. I think it's an asset, because if we knew who Satoshi was, the press would go after him and they'd interview his ex-girlfriend or some dirt he did in college, and they'd use that to discredit the ledger and the technology. And I think a lot would get lost in that. I see asset-backed digital currencies as a derivative, just another derivative. It derives its value from the asset that's backing it. Well, we already have things. Maybe it's not on the blockchain, but that's what we have on the COMEX, that's what we have with the ETFs. You have these tradable assets that are deriving their value from the underlying metal, and I see a lot of similarities and a lot of overlap there, and a lot of the vulnerabilities to manipulation and potentially fraud that you have in the derivatives market. You have those same vulnerabilities. Just because you put it on a blockchain doesn't mean it's not susceptible, because that blockchain is still being managed by a company, by a CEO. He can fork it, he can do it, whatever he wants with it. The metal could not be in the vault there. A lot of these technologies are dependent on transactions. They store it. Storing gold, storing silver has an expense. You need guards, you need a facility that has overhead. And they're giving that to you for free because they're making their money from the transactions, the fees that they're charging to transact in these currencies. Well, if those transactions never materialize, those companies don't make any money. And now the temptation to dip into the metal to meet the overheads, that becomes very prevalent, very powerful, and you have to trust that they won't do that. I'm not really in the trust business, so that's why I have a hard time, and I really wanted to like them, I really did, but I just couldn't get past that.
Dylan, this one's a little bit of a more involved question, and maybe you'll have to give a little bit of a background to this, but Jason Lowry talks a lot about this in his book, Software, and the idea that he talks about is Bitcoin itself, cryptocurrencies, especially Bitcoin, is more than just a unit of money. It's actually power. I want to ask a part and two question, maybe give a little bit of a background, but the question really comes down to, as we're looking at AI and the field is evolving, we see the younger generations ready for a way to transact in digital form, right? You're not going to go send gold in for Amazon. It's not going to work very well. So what we need is something for the digital age. I'm concerned, personally, that there's going to be a lot of imitations of Bitcoin, things that seem to be beautiful, seem to sound like silver and gold, but really are not. What do you see happening in terms of what we call, I guess it really comes down to national security here when we start talking about these digital backed assets?
Yeah, that's a big question. There's a lot to unpack there. So the book Software that Patrick brought up is by a guy named Jason Lowry, and his thesis is that Bitcoin is not just a monetary tool. It just happened to be identified and I guess interpreted by people through a monetary lens, but just because of that doesn't make it just for money. And he uses a comparison to something like gunpowder. When it was first brought up, it was used as a medicine, and then people realized that it had other applications beyond that. And with the applications beyond that, what happened with, and he talks about what happened with gunpowder, is that those that adopted it as a use as a technology for generating power and for weapons, that became a Shelley point, a point at which everyone else needs to adopt that technology, or they're going to get outcompeted in whatever marketplace or whatever thing that they're engaging in. And he's made that comparison to something like Bitcoin, and where Bitcoin is seen through this monetary lens, but it's much, much more, because it changes the dynamic in which and how people operate and how people engage in finance. Because something like Bitcoin, you can't take it with a gun. You can try, but you're not guaranteed to get it. And that dynamic changes the game theory of something that you can use as an asset, and how countries and just entities, individual entities, can interact with each other to transfer value, exchange value, and to gain value. And when you're talking about something like AI and Bitcoin being this kind of transformational thing for how we interact and exchange value and how we perceive those interactions, one of the key things that we'll have to keep an eye out and look for is there will be things that try to imitate it, but with something like Bitcoin, you can't imitate it, right? It can't be copied. We've seen it. There's been 20,000 plus other cryptos created to try and beat Bitcoin, and I don't think we can confuse any of them with Bitcoin. They have different names, they say they do different things, but we know Bitcoin is Bitcoin. And one of the ways you know that is because of the proof of work that's built into Bitcoin, because of the history there, because of the immutable ledger. You know what has happened with Bitcoin throughout history, and none of that can possibly change. And so the only way to copy that, right, would be to go back and change history. And I don't think AI has the potential to do that.
Joe, this question is something that you and I brought up last year. I heard you discuss it last year, and I'm not even going to get into too much, but it was asked again today. The idea of marrying gold and silver with a blockchain, you would argue a position that there may not be as much utility there as you would think. I don't know if you could change your perspective on that in the last year, but I was just wondering, when you consider gold-backed, silver-backed digital currencies, do you still see, is your position still that you don't see a utility for marrying both of those together?
Yes. So in the last year, there's been nothing that has happened that has changed my mind about that. So basically, raise your hand if you consider yourself like pretty well versed about how Bitcoin works, like what the blockchain is and what a ledger is. Okay, all right. So from my perspective, I always have to look at things from like a very, very basic point of view so I can understand just the simplest form of it. an Excel spreadsheet with a list of account numbers on it, and then the next row, a list of the amount of money in each of those accounts. That would be considered a ledger. That's what banks use to show, hey, this is all the money in each of these accounts. And then they also have a list of transactions for where that money came from to go in or out of that account. Now imagine you just click the share button on the Excel spreadsheet and you add a bunch of people to be able to see that spreadsheet. And everybody has a record of a change log. So you can go back and you can see every single change that's happened on this Excel spreadsheet. That's all a ledger is. So you can make that public, you can make that private, and that's what banks use for recording your money when money goes into your account and out of your account. They have all of your information, like your date of birth, your social security number with your account number, and they record when money comes in, money goes out, and that's what the central bank uses to record the transactions for all the banks. So we already exist in a world with a ledger money system. That's all Bitcoin is as well. The difference is it doesn't have your name. It has, it's a pseudonymous. So it's not anonymous. It's pseudonymous. And so there's a way for you to be able to identify which account is yours. But you can also see all the other accounts, how much Bitcoin is in each of those accounts, and where all that Bitcoin came from back to the very first transaction that ever took place. That's all public, everybody can see it. So if somebody goes in there and changes something and says, oh, I have more Bitcoin, everybody else can see, no you don't. we all have the record, so we can see that record that you tried to falsify is incorrect. If somebody, and further than that, there would be no record of where that Bitcoin actually came from. So that is in a nutshell what a ledger is, what ledger money is, and what Bitcoin is. It is a monetary technology, and it's been around for a while. That's what banks use. That's what Bitcoin is. When you look at a commodity money, you're looking at a physical object that is being traded as currency, as money. And so if I want a burger from you, I give you a gold coin. That existed for a long time. The bridging gap between how we move from commodity money to a fiat ledger money today was gold in storage and a ledger recording where that gold was being held and which accounts had the gold. That was the bridging gap, and that failed. The reason why that took place, and I'm going to get into this a lot more later, but the reason why that took place was to solve some issues with commodity money, but it was ultimately came out of exploitation, governments forcing that to happen, and that failed. So when you take a look at the different technologies of something like commodity money and ledger money, it's really like a Frankenstein hybrid. They don't really mesh well together. The reason why is because if the commodity is the money, you don't need the ledger on top of it. Just trade the commodity as the money. If the blockchain is the money, then you don't need anything for it to be redeemed for. And so when you try and merge those two things together, what you end up is with a product that is more complex. It costs more. It's higher cost for transactions, and you still actually have all of the problems that you had with regular commodity money held in storage. So just because there's a blockchain out there that says there's this many ounces in this vault, I still have to trust that it's actually there. And so blockchain doesn't solve that problem. So all the same problems exist without improving on any of the speed, the efficiency, and other things that you get with alternative commodity storage solutions that already exist today. So I don't see a way to marry those together unless something changes in the future, that you would both reduce costs compared to the alternative that is already being used, and solve the problems without introducing something that's a bigger problem. There's always a trade-off, and so far those trade-offs, they come up with a worse product.
That's why I like Joe Brown. I think his answer was really very simple. It's hard to understand exactly the way you said it for me because I have a hard time explaining it that way, but intrinsically, fundamentally, I understand it because I understand the value of Bitcoin and the blockchain and the value of silver's in my pocket. So to me, it's a very simple parallel that I don't think I would ever cross, but I do ask the question, and I'll come back to you again. Your audience, they are still learning about Bitcoin and cryptocurrency and what all this means. They have a lot of questions coming forward. What do you think the biggest barriers are for people who are trying to bridge that gap and move from silver and gold and trying to understand Bitcoin? Because I don't believe that the answer is going to be a gold-backed digital currency. Where do you think is the biggest problem for people migrating to that new paradigm shift that we need digital money for a digital age?
I find that, originally when I started my channel, I talked about cryptocurrencies. I found a very big divide between the precious metals people and the crypto people. And the longer my channel goes on, I'm finding that the two of them are starting to come together more with the same ideas. Like those who were in precious metals have kind of taken on the idea of taking on Bitcoin, and those who are like Bitcoin maximalists are also liking the idea of precious metals. And so it leads me to believe that they both are looking for something out of the same thing from them. It's to get away from that third party or get away from the government. And by having silver, by having gold, by having cryptos, that's the one way that you can step yourself away from the third-party claim out there, where you're not legally responsible to a bank account or an app or an envelope that comes in the mail or anything. And I think that's probably where the biggest hang-up starts to happen, is that whether or not they can put their faith into that idea to basically relinquish the third party from it. Because a lot of people that who are not getting into either one of these, they do it out of fear that they will lose all their money, right? Or that the precious metals may not be worth anything to them or don't have any value to them now. And so that's really where I think the biggest hang-up is to get that mindset away from I don't need a bank account, I don't need that third-party claim, I don't need anybody else involved in my life, and to take it on for myself. Well, that responsibility is scary. And I think that's probably what ends up hanging a lot of people up, is that they're just in fear of not knowing what that's like.
Yeah, I think some people like to hold their crypto on exchanges, and they're a little. We're going to get there because it's true though, right? It's when you start learning that you are the one who is responsible for your assets. It's a pretty simple solution. You are now responsible for doing the security and the protocols that the banks do for your money now, right? So it is your responsibility to be the holder of your assets. You are a sovereign individual with the rights to carry these assets, and I think that's what they love. Is they love holding it in their hand. They love knowing it's in their protection and their custody, and no one can take it from them. And you're right, that is a very big one that we're starting to see, is they don't know how to hold it themselves. I guess I'll put the question to Dylan then next. We have been seeing this a lot, especially in our businesses, where people have questions about how do you store your Bitcoin, where do you store your Bitcoin, what is the safe way to store your Bitcoin? And I guess for a great point to say it right now, let's just give them a chance to say, what are the most fundamental pieces that you would say mirror gold and silver in terms of Bitcoin and how you store your Bitcoin? How are there similarities there, and what are the things that you must take care of when you're protecting your Bitcoin?
That's a good question. So like Patrick mentioned, self-sovereignty and a level of responsibility. And when it comes to something like gold and silver, and we all know this, especially when it comes to something like Bitcoin. We talked about this yesterday, the concept of counterparty risk, and recognizing that when you outsource the responsibility to take care of your own assets to someone else, right, you have to trust that they will give your assets back when you want or need them. And we've seen just in the present day, we've seen so many examples of that trust being broken, that trust being abused, people having funds, having them locked up thinking they had funds and then them not really being there. And if you look at history, history is littered with stories about this, about counterparty risk and people trusting the wrong entities, the wrong individuals for that. And so one of the most important things is it's a parallel between gold and silver, and I think it's why, and Bitcoin, and why people love gold and silver so much, is it's something that you can take self-custody of. And when you take self-custody of it, you know that you have it, you know that it's there. And with Bitcoin, the concept that gets lost on a lot of people is because they can't physically hold it, they feel like it's not there. But I was talking to someone today over at the booth outside, and they were asking about Bitcoin, and a concept that I like when it comes to Bitcoin is when people say the map is the territory. It's not a representation of that territory. It is the actual territory. It is the asset. And so the information of your Bitcoin, when you have that, and those are your private keys, by the way, that is the information, that is the secret, that is the key thing. That is the equivalent to holding a gold brick. The private keys are the equivalent of that, right? And if someone else has your private keys, then you have to trust, just like if someone else has your gold brick, you have to trust that they'll give it back to you or they won't abuse that. And that's why we say, not your keys, not your crypto, or not your keys, not your Bitcoin. And so having that, owning that, you have possession of that, you have control over that, which is the exact same as silver and gold. Right? That information is the bearer information. And one of the key differences that I think is just completely fascinating and mind-blowing for me is that a difference between holding a gold brick or holding silver, and this is kind of what I talked about before, where it changes the dynamic of how value can be exchanged or how value can be taken from people, because this is important. If you have a gold brick and someone else wants that gold brick, the reality is they can kill you and take it from you. Again, there's been examples of that throughout history, invading armies, invading empires, just going in and taking the assets and resources from an entity that cannot protect itself. But with Bitcoin, if that information, if those keys are in your mind, and you've taken the responsibility to be self-sovereign, and you've taken the right steps to reduce that risk, to know that if someone wants your Bitcoin, they can only get it if you give it to them. And for me, the mind-blowing thing is it's one of the only things that you can truly own, that no one can ever take it from you unless you give it to them or you give them the opportunity to take it from you. And I think it's a very powerful thing and a very powerful concept. And I know here in America, we're very privileged and we don't have to worry about things like that. But there's 8 billion people in the world, and there's many of those people that aren't banked, that don't have the security of knowing that if they put gold under their bed in their house or in the safe in their house, that it won't be taken, right? Most people in the world don't live with that type of security. And so having something that they can just keep on them in their mind and store their family's wealth over time is extremely powerful. And it was extremely mind-opening to me when I learned that concept.
Joe, next question is going to you, and then we'll open it up for some questions from people. But I know that you like to study the flow of money quite often. You're looking at where money's moving from what parts of the market, if it's flowing into the repo markets, if it's coming out of the reverse repo markets, is it flowing out of the 401ks into funds? And I know this might be something you would want to bring up too, so I'll ask it to both of you. When we see traditional investing moving these days, do we see a common theme? Is it moving out of certain sectors into something very rapidly? And I'm not even suggesting that it might be Bitcoin. I'm suggesting, could it be junior miners? Could it be that they're really bullish that the silver is just about to go crazy? Are they moving it into physical metals? Or do you see 401k money truly still staying where they're being parked in Vanguard and all these other retirement funds? To all of you first.
All the retirement accounts, pensions, 401ks, IRAs, most of that money is locked in, meaning like especially all the money in pensions, like individuals don't have any choice over where that money is invested or how it's invested. So that's going to be in stocks and bonds. 401ks people have more choice over, but it's still limited to the pre-selected menu of options, which again is going to be stocks and bonds for most people. And then IRAs are going to have the most, people get, choices people can do, individual stocks, options, gold, Bitcoin, things like that with IRAs. But there's a lot less money underneath the banner of IRAs. And so the vast majority of the money in the retirement system is sticking in stocks and bonds right now. And that's not going to change anytime soon. Now, I think one of the big risks that most people are not paying attention to is the fact of passive investing overtaking active investing. And so when you look at all the money that is in pensions and retirement accounts, that's just every time somebody gets a paycheck, money goes into that system and it automatically purchases stocks and bonds to an automated pre-selected allocation of buy this much in stocks, buy this much in bonds. Of these stocks, we're just going to buy, all of these. There's no active price discovery going on. There's no valuation taking place. There's nobody looking at that and saying, I'm going to buy this stock because it looks undervalued. I'm going to get rid of this stock because it looks overvalued. It's just if money comes in, we buy, and if money ever needs to come out, we sell, regardless of value. And that's very dangerous. Well, it's a very smart way to invest if you're one of the only ones doing that. Because if everybody else is doing active price discovery, you're going to have a consensus arrive at somewhat near the real valuation of what it should be. So you can piggyback on that as a passive investor. The problem is over the last 50 years, passive investing has overtaken active investing. And so now most money just comes in and buys regardless of value. And so that will work until old people start dying. Because then you have money start to leave the system instead of on net money coming into the system. When you have more people retiring, more people withdrawing, then it's just sell regardless of value. So the reason why in the last 20 years we've had stock valuations at record highs for the last 150 years, it's never been as high as it is today, and over the last 10 years, is because of this dynamic. And when that dynamic reverses, instead of buying at any price, everything gets sold at any price. So we could be shifting into a time period over the next coming years where that shifts and everything gets extremely depressed in terms of valuations for a long time because everything is just getting sold because people need to take money out regardless of what the price or the value is. And so right now, investment-wise, there's a lot of money still doing that, but I think it's, just demographically, it's set to switch at some point in the near future.
So the one thing that I am most weary of right now and watching closely is the shrinking supply of money. And I always get a lot of, puppy dog head tilt when I say that, because it's the 2020s and we all watch trillions of dollars manifested magically out of nowhere. They don't even bother to print it anymore. They just create it digitally. Jerome Powell's words, not mine. But that stopped in 2021 in November. They stopped printing money. And shortly after that, they started destroying money with quantitative tightening. And they also started raising interest rates. Interest rates is the price of money. And since that's happened, the banks have gotten very worried, especially after March, after Silicon Valley, Signature, Silvergate, Credit Suisse, First Republic, PacWest. After all the banks started going down, the banks went on defense. And they got very careful about who they lend money to. They stopped making risky car loans. A lot of car companies went out of business earlier this year. A lot of risky car lenders. We see the housing market is freezing up because people can't afford mortgage payments. It's not crashing, it's frozen, it's just not moving. Money's becoming more scarce. And you can see that in something called the M2 money supply, which is the sum of all checking, savings accounts, money markets in the country. The M2 money supply is shrinking, and the last time that happened in this country was 1930. That was not a good time for the price of anything. All right? When the money gets scarce, money is the denominator in the price equation. Right? If that gets bigger, the value goes down. I'm sorry, if that gets smaller, the value goes down. So as the money supply shrinks and dollars become more scarce, that is putting a natural downward pressure on the price of everything. That includes real estate, stocks, bonds, and yes, even gold and silver, and even Bitcoin. Now, Bitcoin has its own deflationary function, the halving cycles that you probably will hear more about from people better qualified than me to talk about that later on. So Bitcoin may react differently or to a lesser extent. But the shrinking supply of money is going to put downward pressure on the price of everything. And it's going to require action from the Federal Reserve to reverse that. The Federal Reserve may take that action, but they might not. Because for the last 50 years, they've taken the action to lower interest rates and print money in order to prevent that from happening. But they didn't have the inflation problem that they have now to deal with while that was going on. They didn't have the lack of credibility that the Fed has now after transitory, after telling the banks in the world, don't worry guys, we're not going to start raising interest rates until the end of 2024 at the earliest, Here we are 525 basis points later. It's not even the end of 2023. They've been raising interest rates at the fastest rate we've seen since the early 80s. So a lot of people just assume that they will turn on the money printers and lower interest rates. It might be a safe assumption, it might not be. If it's not a safe assumption, then cash is the best place to be. And that's where most of my 401k is sitting right now, in cash. I don't know, maybe they print, maybe they don't. Until we know for sure, that's a very big fork in the road ahead.
I'm going to open it up to a few questions. I know this is going to be a lot. I've got 4 of you guys. This is awesome. First of all, whoever's taking pictures, make sure you get one of this, because like I'm pretty happy that this panel's happening and like I get to be on stage with these. You guys know what I'm talking about, right? You guys watch these guys too, so this is kind of a big deal for me to be here. But I'm going to give it to you guys. You guys are why we're here. Your questions are the most important. So I want to get a few of those in. If you have any questions, please raise your hand. I'm going to walk the mic around. I'm going to go to the back of the room because we haven't gone there very much. Derwin, you got a question? Right back here.
Yeah, hi, my name is Aaron. I actually have a question for the gentleman who's just speaking in the center of the blue. Yeah. So you said that your money is in all cash 401k accounts and investments, whatever. What do you think about gold and silver based 401k as well as Roth or traditional IRAs?
So when I initially moved my 401k, I left my day job in August of last year and started doing YouTube full time. So that's why my 401k is now in all cash. I had to take it with me when I left. So I parked it in the money market within a self-directed IRA. So the plan always was to move to gold and silver, largely with my 401k. And then I watched the money supply start to shrink. And that's what made me say, you know what? Cash is getting more scarce. The demand for cash is rising. Maybe I'm in the right place. Even though we do still technically have inflation. Right? I mean, prices are still going up. It's slowed a lot. The prices are still going up. A lot of that is the function of artificial scarcity that's been created by the morons that are in charge of the world right now. And what they've done with the lockdowns and the energy supply. So I do like gold and silver within a 401k. It's not perfect. I prefer, owning it and holding it. I prefer my own, but I can't access that cash without paying early withdrawal penalties. I'd have to pay the taxes owed on it. If I took possession of that, that would be a very expensive premium if I just decide to take my whole 401k, put it in a physical, and take delivery of it. Right? That would be like lighting my own money on fire to do that. So I would have to accept a little bit of counterparty risk and trust somebody else in a vault to hold it for me. They charge me the expense of protecting it. So there'd be a little bit of carrying cost, but that was the plan when I moved to cash, was to eventually do that anyway, and I may still end up doing that, but as long as the money supply keeps shrinking, I'm gonna hold off and wait before I do that. But that's probably where I'll end up.
Got one more back here.
Hi, this question is for any of you four. So we know the powers that be have decided that the central bank digital currencies is the next system they want us on. And if history repeats, we know they will create a crisis to herd everybody into the CBDCs. So when the time comes, isn't it in their best interest to outlaw all private and decentralized crypto? Is that a possibility?
You're chomping at the bit.
Is that for me?
He said any of you four.
Okay. And just to clarify, the question is, knowing that a CBDC is likely coming as a result of looking at history and where things are headed, wouldn't it be a good idea to try and escape the system right now before we get there?
The question is, if they want us in a CBDC, isn't it in their best interest to outlaw private and decentralized crypto when the time comes?
Oh, okay. Yes. So, in my opinion, that is one of the reasons why we've seen the crypto landscape unfold the way it has over the last couple of years. So, when it first started gaining mainstream attention, it was by the media, by financial professionals, by the government. It was just ignore it. This is just a crazy internet thing. I'm thinking probably like right around 2016, 2017 is that. Bubble popped. They ran their victory lap, say, you know, hey, we were right, but it didn't die, and then it started to come back, and then you have 2020 start. You have a brand new way. Well, because of the money printing, you know, anytime you have money printing, go back and look throughout history. That's when you see the scams, the fraud, the Ponzi schemes start. Charles Ponzi, the original one, Bernie Madoff, like all of these big ones, and especially all the things that happened during 2020, 2021, are a result of, hey, we throw a bunch of money into the system. Now everybody is scrambling, looking for return. There's so much money that people just say, hey, I'm going to give you better than inflation, I'm going to promise you. And there's so much desire to find something that will outperform the market, which is already doing well, that they, you know, abandon caution and throw money into these scams, and then lose everything. And so you start to see that dynamic take place, but you saw zero regulation. Which, look, from a standpoint of like wanting freedom and wanting liberty, it's like, you know, let the people who are gonna, you know, make bad decisions experience the consequences of that, until you realize, well, that's, you know, ultimately a result of all the money printing, which is not, you know, freedom in and of itself. And so when you look at that, you say, okay, they print the money, all the scams start, and now they don't regulate anything, and they let things start to collapse. And they let people continue to do this. They let people continue to run these scams that a lot of people with their heads on straight knew, like, something's not right here, but they ignore it. And then after the market takes care of, you know, seeing the consequences of all the money printing, so all the stuff starts to collapse on its own. Now you start to have the regulatory bodies come in to destroy anything else that's left. What we are seeing, though, which is kind of cool, they kind of know which ones they can't destroy. So that's why we're not seeing anybody realistically talking about trying to stop or go after Bitcoin. You're seeing it about everything except for Bitcoin. You're also seeing some things being looked at as, hey, we're going to co-opt this and turn it into a stable coin, and eventually down the road maybe turn those stable coins into a full-blown CBDC, or maybe there's another path we take to get there. But yes, ultimately I think that's what this whole big, you know, last couple of years has been. We're going to try, you know, as a government, try and let everything collapse on its own first, let people lose so they hate crypto, and then anything that's left we're going to try and destroy it. And then introduce our alternative instead.
Okay, one more question.
This is for Joe. We haven't heard the panelists this weekend talk about the bridge between Bitcoin and real estate. Just want to know why there's a slow process between the marriage between real estate and Bitcoin, and how can we speed it up?
The marriage between Bitcoin and real estate? This is probably a minority opinion, a controversial opinion, but smart contracts, NFTs, any marriage of anything crypto to anything else, to anything like gold-backed cryptocurrencies, real estate, contracts, like literally anything, is number one, it's already almost fully failed. And anything that's left, in my opinion, will die out unless the government forces it to happen again. It's the same exact thing where it's like it offers no advantage over the current system, and it introduces more complexity and more cost. And you still have all of the problems of of trust. It's like the physical thing does not improve by adding a blockchain layer on top of it, whether that's real estate or gold or anything else. Now, if the question is not crypto, maybe the question was Bitcoin specifically, then I would approach that from the standpoint of Bitcoin is money. So if people around the world do decide to adopt Bitcoin as money, then it would be used in all transactions, including things like real estate. And you would, over time, you would see deflation return to all markets, but including real estate. And so you wouldn't necessarily see any sort of a marriage between Bitcoin and real estate. It would just be used as money for real estate, like it would be used as money for everything.
And I might even, Dylan, hit that up, because you know property and all the other stuff. Let's
Yeah.
talk about some of
So
that.
and I think you brought up a good point that, the marriage is really selling your house for Bitcoin, using and making that value exchange. And then it also is when someone's like, I got $100,000, what am I going to do with it? Am I going to put a down payment, or get a loan on a rental property and turn that into a long-term rental or an Airbnb that has all this other complexity to it? Or am I just going to buy Bitcoin? A small percentage of people are going to start buying Bitcoin and allocating capital towards that. And so what that does is it will pull demand from the real estate market. And if that happens, as it happens over time, just because Bitcoin is a scarce supply, you may start seeing a dynamic change where returns on Bitcoin or storing more capital in Bitcoin start to be more appealing than a lot of different real estate opportunities. Especially if we can fix some of the supply problems and start producing more and more houses, and that problem goes away, then the returns in real estate combined with the hassles in real estate, because it becomes less of an incentive. And then on top of that, like we talked about before, is when you own real estate, you do have to deal with hostile or unfriendly governments. So if laws change, if they want to change the taxes, anything like that, you can't just pick up your house or building and move it. And we're living in a world where we're seeing a lot of economic uncertainty and a lot of economic change. And as that happens more and more, it just makes the decision or the consideration of Bitcoin be more and more present and more appealing to people with money on the table that they don't want to lose.
I think that's a really good answer, but I have a different perspective than maybe both of you, and I'll share it. I believe that the reason that Bitcoin has not yet been mainstream is because they're afraid. Mortgage companies, escrow companies, title companies, they know that blockchain can take away all of their work, because the entire point of a title is to verify that you own the land and only one person owns it. So as we start seeing this more mainstreamed approach of Bitcoin being used to purchase, as smart contracts become more mainstream and more prevalent, I think we'll start seeing that. The other thing that I'm starting to see is, believe it or not, imagine you are someone 2 years ago, and I have many stories of where this actually happened. 2 years ago, the interest rates on homes were what? 3%, 2.5%? People were getting 2.5% interest rates on a $500,000 home. And these people were taking out HELOCs against their mortgages, right, against their home. They would take out $200,000 and get ready to put that into Bitcoin, because they're actually backing their mortgages with Bitcoin. Because no matter what happens to the house, you always have that Bitcoin. And while it may have been $200,000 when you bought it now, what will it be in 5 years? Let's take a look at that. And if you actually, there's a site we just launched, satpulse.io. If you guys get your phones out and look at it, it's pretty cool. Satpulse.io will show you a chart specifically for home prices derived from Satoshic value. And over time, it's very clear. It takes less Bitcoin over every year to buy the same house. It might take 20 Bitcoin now, but if you can take out 20 Bitcoin, and now you have that 20 Bitcoin, when your house is worth $600,000, that's not a problem, because your Bitcoin is worth $600,000. Now you can buy 20 houses. So people are actually starting to back their mortgages with Bitcoin, because they don't want to keep the value in their home. They want to keep the value in their Bitcoin, because they can always take that and leave the country where they can't take their house. One more question, or are we good? One, okay, right down here, then we'll be done. Okay, we'll go out here. We didn't go this far. Sorry, we hadn't gone
The train leaves the train station.
yet. Maybe we'll do 2 questions. Okay, 2 questions.
Hi, my name is Debbie Pusatier, and I live in New York. I'm sorry, it kind of sucks there, but here's my question. So I'm hearing a lot of different information, and the thing I'm curious about cash. So we all know something's coming. We know that the dollar's failing, the value's going down, inflation's going up. We all feel silver prices are going to rise, right? We all feel Bitcoin's going to rise. If you had a chunk of cash right now, knowing all of this scenario of where the boiling is coming, right? What would you do with that chunk of cash? Would it be real estate? Would it be cash? Would it be Bitcoin? Would it be silver or gold?
I think, why don't we all take a quick shot at that? Because everyone's chomping at the bit.
At this point, I would be sitting in cash. I believe that there's going to be a liquidity crisis, very much like what we were talking about here just a few minutes ago, and I think that there's going to be a buying opportunity. Now, whether or not you're going to be able to get into the asset that you're looking for, I do think that if you have liquidity issues, you're going to be finding that a lot of stuff that has quick access to cash, meaning selling off your silver, your gold, your Bitcoin, possibly real estate or whatever stocks, that's going to be the opportunity to buy in. And so, yeah, I'm looking at that moment, and I don't think it's too far away. So cash, not for a long haul, not by any means, but for the short run here, yeah, I think it's a good position to be in.
I too am in largely in cash. I nibble at gold, silver, and Bitcoin on a regular basis. That's kind of programmed regardless of what market conditions are. I just do that as an insurance policy against me accidentally being wrong about everything. So, I entertain the possibility I might be wrong. But right now, largely in cash. If I had cash burning a hole in my pocket, that's where I would stay. And I'd leave you with one thing. There's a book that came out not too long ago. It's for free on the internet. It's called The Great Taking by a guy named David Rogers Webb. And he is warning about a massive deflationary event. And it is an event that could usher in the you will own nothing and be miserable scenario that the World Economic Forum has been talking about. Highly recommend it. It's only about 130 pages. You can read it in one sitting. Very good read, and that'll make you want to stay in cash too.
That's a good question. I think the concept you should think about is get off zero. Build your on-ramps and off-ramps. Focus in on the things that you know and the things that you're familiar with, because the last thing you want is to have all these options on the table and they sound good, but you not know how to implement or execute when the time comes. And the other thing is understand what you're exposed to and what risks you have. If you are in all cash, just know that you're fully exposed to that market. And so if it goes in your favor, good job. But it can also go against you. And so having some form of diversification is good, and being set up and having a strategy in place so you can rebalance that when the time comes, I think is appropriate. And so I do think there are going to be more buying opportunities in the future. So going all in and YOLOing into any one of those asset classes is probably not a good idea right now. But just being ready, being prepared, being educated, and having a strategy in place would be what I would recommend.
You didn't answer the question. Cash, Bitcoin, gold, silver.
A little bit of each. Yeah.
All right, so it's a little bit of a loaded question because what is a chunk of cash? That's different for everybody. And what else do you have? So do you only have $1,000 and you're homeless, or do you have $100,000 cash and you also have a portfolio? So I'll answer that from just a general starting point of the portfolio that I consider the real all-weather portfolio. And depending on your macro outlook, you can adjust it from there. But I like to start with 30% real estate because they're not making any more of that. Land. There's always been and always will be the same amount of land on Earth, unless we figure out a way to drain the oceans. They're 30% in business. That can be in publicly traded companies or private companies, your own business. About 20% in gold, because throughout the course of the last 5,000 years, gold has maintained its purchasing power throughout inflation, deflation, wars, different geographies, different languages, different religions, different governments, and maintained its purchasing power. And then about, 5% in Bitcoin, and the next 10% in derivatives for hedging your portfolios. And yes, you can hedge real estate, you can hedge stocks, and making small asymmetric bets on other things so that you can decrease your risk of, hey, I think this company is going to do good, instead of having to allocate a decent chunk of my portfolio to that company and then risk it going down. I can use derivatives to make a very small bet, so if I lose very little. If I win big. And if that didn't add up to 100%, I'm sorry, I couldn't do the head math there, but that's in general the allocation that I like to start from. Oh, I guess the other 5% would be cash. I just missed the 5% cash there. And then from there, if you think it's very clear we're heading into a short-term deflationary period, get a little bit more cash, because that does better during deflation. If you think we're heading into an inflationary period, get rid of the cash, go more into things like gold, go into more of the things that go up when inflation goes up. Even public stock markets do better than cash. So that would be the starting point, and adjust from there.
So you guys have heard quite a lot of different perspectives here, from hard cash, go heavy on cash, to have a mix of everything. And you got Joe again saying, well, it kind of really depends on a whole lot, which is what you get from Joe, right? So if you guys want to know, shameless plug for you, Heresy Financial University. If you guys like this stuff, this is the kind of stuff he talks about all the time on his channel. These guys have different opinions, but I'll give you my opinion. I buy Bitcoin, a lot of it. Only Bitcoin. I have enough silver and gold to make me happy. I don't need any more than that. I'm good with what I have. I'm all in Bitcoin. Real estate, I don't mess with it. I have a brother who's better at it. He does the real estate. So that's how we do real estate in our family, right? But I'm all Bitcoin. I believe Joe is right. They're not making any more real estate. Neither are they going to be making any more than 21 million Bitcoin. And the whole world wants the Bitcoin. They don't all want the US land. So that's my perspective, but I did promise you one last question.
So I know you guys don't have a crystal ball, but worst case scenario, what kind of event or chain of events would make it to where Bitcoin is worthless or not usable? Meaning, like, if there's another technology that comes along that's better, or something happens where there's no demand, nobody wants Bitcoin anymore. What's your worst case scenario for something like that? It's 320, guys.
I'll answer it first. There's nothing that can take down Bitcoin. No, listen, you're getting an opinion from a guy who's a total Bitcoin maximalist. Worst case scenario for me, the worst case scenario is the elephant in the room. Bitcoin is based off of the SHA-256 algorithm, which we know was developed by the CIA. So in my opinion, I believe that it is a strong possibility that the CIA was somewhat involved in the creation of Bitcoin. Should that be the case, I'd be still okay with that. So even because the reality is they still don't own the network. The network is distributed. That's the beauty of it. Aside from the internet going completely down forever and ever and ever and never having any power again, I don't see it happening. That's my honest answer. I might be a little narrow-minded when it comes to that. I hope these guys have a better answer for you because I can't see one.
Worst case scenario where Bitcoin becomes completely worthless?
Or useless, not having used better technology. Your question.
Because of better technology.
Either one. No demand for it or use for it.
At this point, yeah, I'm kind of in agreement with Patrick. I just don't think you can put the cat back in the bag. I think it's out and it's accessible. And really, if you think about it, like how do you cause it to be completely worthless? Two people can do transactions with Bitcoin and no longer worthless, yeah? So there is no situation in which I can think it can be completely worthless outside of, complete electricity failure.
There have been other cryptos have come along and taken some of the drawbacks to Bitcoin, that it was slow or that the fees were expensive, cited those as a problem with Bitcoin and claimed to have been a better Bitcoin. And all of those have failed miserably. They've gone up really fast, somebody did something sleazy, and they're gone. So that claim has already been made and failed. Hasn't been that long, but people have already tried that. As far as what could make it useless, I've heard the EMP idea as, okay, an EMP solar flare takes out all the world's technology. That would make Bitcoin worthless. Yeah. That would also make your 100-ounce silver bar good for nothing other than clubbing your neighbor to death to steal what he has to eat. There's 7 billion of us on this world, and we can't function without electricity. So gold and silver is going to be worthless then too. In that case, lead is going to be the best asset you could have in the world.
And I'm prepared for that too.
And then the other thing, and some of the more computer tech savvy guys out here could probably tell you this. I've heard the risk that eventually computing power will advance to a point where the Bitcoin network could somehow be spoofed. That you could fool all the computers at the same time. And my understanding is that even with Moore's law, with the rate of computing power doubling every so many years, we are still centuries away from the computing power existing that can pull that off. And that's if Moore's law, which is so far held up since computers were invented, were to continue. So there are some very far-fetched scenarios where Bitcoin would become worthless. Those scenarios are so catastrophic that planning for those is not really a reasonable exercise and not a really good use for your mental capacity.
Yeah. I mean, you guys have said just about everything on how it could become worthless and why it probably won't. If it could be stopped, it probably would have been stopped by now. I think the cat is out of the bag. Even with something like, people like to talk about quantum computing or something that could hack the algorithm. Once that comes into play, there's a lot more beneficial things to attack and go after than the Bitcoin network. There's a lot more vulnerable systems where you could, do well. Because once you attack the Bitcoin network and you succeed, then the network becomes worthless. And so an attack on the network like that would only be designed to destroy the network. And if someone has that capability, they can destroy just about any other type of encryption or network out there. So the likelihood of that happening and that playing out is very, very low, because if someone does have that type of computing power, generally what Bitcoin does is it incentivizes them and makes it more beneficial for them to actually participate and contribute to the network versus try to destroy the network. And so just the game theory of it, and especially at this point in time, in the future, who knows? But the game theory of it, it's better to play along, and if you have a supercomputer, use that to mine Bitcoin, and you'll outcompete everyone else, and you'll have more Bitcoin than everyone, and Bitcoin will be more valuable, and you'll make more money that way. So I really don't see anything feasible. I think the easiest thing, you kind of hinted at it, is that maybe there's just some weird, piece of code that gets introduced in some way, somehow, that everyone misses, and next thing you know, it gets to the network, and the network shuts down. The chance of that happening, very, very slim, but that'd be like the kind of black swan event that's just like, who knew that like a mouse running across the desk of a computer programmer, is going to be the thing that leads to the collapse of the network. And when I say that, it sounds ridiculous because it is. The chance of that happening is basically zero.
It's actually zero, because the way it works is the miners themselves have to vote on the proposals and the protocols. And miners are not going to change the supply, and they're not going to change the tokenomics because it would only hurt them. So the reality is, the more people that are mining, the more we know for sure that the network will probably never change. Joe, I'll let you finish up.
All right, so I have three answers. The first is actually a question I heard from over there in the midst of an earlier question about why would the CIA create Bitcoin if that's, a possibility. The answer is actually the same as why whoever created it. It's because it never would have been created without the government doing what it has done to our dollar. So it's possible if the CIA, the deep state, or somebody inside the US government created it as a backup plan for the future failure of the dollar, so that the United States government still has purchasing power if the dollar fails. So that's a potential. Second, in which case it would still keep going. That's not a reason why it would die.
Yeah, but if they were, then Satoshi would have 1 million Bitcoin.
Which would be
The US has a lot of Bitcoin.
That's what I'm saying. Yeah, it would be that's what that wall would be for. It's the backup plan for the failure of the dollar. So that's a potential. That's a possibility. Probably unlikely. Nuclear war, obviously, if everything gets wiped out and a bunch of people die and the internet goes down and go back to the Stone Age, obviously that's a possibility. But I think the biggest one that most people don't talk about has to do with the Lindy effect. Has anybody ever heard of the Lindy effect? Okay. Which one do you think will exist 5,000 years from now? The Great Pyramids or the Eiffel Tower? Pyramids. They're already at least 5,000 years old. They're made out of much stronger materials. They've existed through every single weather pattern, governments, wars, things like that. The Eiffel Tower is made out of metal. It'll eventually erode. It'll decay. Who knows what happens if there's a war there, it gets blown up. So there's more of a chance that the Great Pyramids survive because they've been tested, they've been proven, and so more has been thrown at them, and so there's greater likelihood that they will last longer than something that is newer. That is true of things like ideas, that is true of things like technologies. The newer something is, the lower the likelihood is that it persist into the future. When you look back throughout history, we have seen countless examples of government currencies failing. Every time, gold replaces it. Could this time be different? Yes. Statistically, people, governments, other nations will choose gold again. Now, again, it could be different, but the only reason why Bitcoin was invented in the first place is because of what government did to our money. And because of what governments were doing to money, it was actually inevitable. There were many people experimenting with it and trying it and doing things. And so when you roll the dice in a certain direction, a certain number of times, you're bound to come up with one that meets the criteria that would be the criteria necessary for it to work. And so if governments stop messing with the money, or another government comes up with a new plan on having a solid money, or people choose gold, that's always a possibility, and then you don't need a different form of money. And so at the end of the day, it just comes down to adoption. That's it. And if people don't adopt it for any reason, then it does fail.
Thank you guys, appreciate it. Guys, round of applause for our guests. Thank you so much. You good?
We are good.
Okay.
Oh. One, two, three. There you go.
I appreciate that. You guys literally have no idea. Ninja keeps saying this to me. All these guys keep saying, man, why do you guys, you're so nice, you like me so much, you're so, oh, stop talking. The reality is, I really like these guys. I feel like the people I tried to bring to you, again, are people that I respect, that I believe teach me to think a little different, right? You asked the question earlier of, well, can Bitcoin fail? I'm too naive to see it any other way. So for me to see Bitcoin failing, I must look to people who think differently than me to see a different perspective. And I appreciate that perspective because we need to ask these questions. I've had this even honest bet with people. If you think that you can convince me Bitcoin is not good, come and try it. If you win, I'll give you $1,000 in silver. It's pretty simple. No one has won yet. Tom Powers hasn't won. None of the junior silver miner CEOs have won. You can't win because I know what I believe. So next question, I have to bring up Rob Keats of Gold Silver Pros. Again, I'm so thankful that Rob is here because Rob actually, like I said, was the guy who allowed me to get into this space last year as I was learning. So Rob, without further ado, thanks, bro.
I'm back. Again, I'd like to thank everybody in the room for being here. It's wonderful to see so many people at a conference like this. It really makes my job easier. So today I'm going to talk a little bit about gold and the best way to get into gold. So this is going to be more of a gold-focused investment talk. This kind of applies to silver in a similar way, although I think silver is a different animal.